Nigeria's central bank has met commercial banks and forex dealers in order to look at ways of relaxing foreign currency trading controls and, of course, a few other trading limits that were put in place in the heat of the currency crisis that racked the country in the last quarter of 2014. Is it time, perhaps, for Nigeria to accept that 200 naira to the dollar is the new norm, especially as the dollar gets stronger and that Fed rate hike just keeps getting closer and closer? We'll be exploring that question live from Lagos tonight. Welcome to Global Business Africa. I'm Ramanyak. Here's what's coming up. South African CEOs come into a face-to-face encounter with the ravages of poverty. And we'll be in Uganda looking at the rush to cash in on demand for set-top boxes in the East African nation. Now, as stated earlier, let's start in Nigeria. The central bank there called a meeting with chief executives and the treasurers of commercial lenders earlier today to talk about measures imposed on the foreign exchange market over the last 12 months and potential reform. The CBN imposed some really tight restrictions on that market between December last year and February 2015 in order to curb speculation on the naira and preserve what is left of its dwindling foreign reserves. Now, before setting those restrictions, the central bank had been battling, spending money to prop up a currency amid a sharp fall in global crude oil prices. That move then triggered a sell-off in assets by foreign investors. JP Morgan, in fact, has now threatened to eject Nigeria from the government bond index of emerging markets unless it restores liquidity to currency markets as well. Let's head over live to Lagos now. Deji Badmus is live there with more data on this story. Deji, I know this meeting has been going on for quite a while now. What's the latest outcome from the meeting between the central bank and the currency traders?
Well, Rama, we actually do not have anything yet coming out of that meeting. No announcement has been made, but we understand the meeting actually took place in Abuja. We're still waiting to get information now as to what actually transpired and what the CBN actually told the Chief Executive and Financial Market Dealers Association. So it's still a waiting game for us. We're waiting to actually find out what exactly transpired at that meeting, Rama.
Indeed. Let's focus on what exactly the market conditions are like right now. In December last year, the CBN imposed quite a few curbs on traders. No depositing currency trading funds overnight, no after-hours trading and that sort of thing. At the time, the CBN said these measures were temporary. But do we have any idea when these measures will be lifted?
Well, we have no idea when these measures will be lifted, probably sooner than later. But fact is that the reasons for which the measures were taken in the first place have actually not disappeared. You still have the currency not doing too well, even though there is some semblance of stability as we speak. But Rama, fact is the reasons for which the measures were taken in the first place have actually not disappeared. And besides, if we're going to get anything coming out of the CBN and the Monetary Policy Committee, we'll just have to wait until probably when Buhari sets up his cabinet, because as we speak, you know, the country hasn't got a finance minister. We still do not have a clear idea of the economic policy of this government. So I believe the central bank is trying to just tarry a while, wait for when the government settles down and things actually take shape before it begins to roll out maybe a new set of policies, Rama.
Indeed. One last question for you. There's also a rule eliminating net open positions of 1% of shareholder capital for banks. Is that still in place as well?
Very much in place. Okay, well, it's not. It's actually not 0% now. It's actually 0.5% because the CBN actually increased it to 0.5%. That's from 0.1% to actually 0.5. So it's still very much in place. And even though you know, some of the banks are actually lobbying, and some people are actually saying, look, it's time the CBN reviewed it upwards. One of the outcomes we expect from this meeting today is some kind of pronouncement now on that, but we just have to wait and see. But as to that one, you know, the rule is still very much in place. It actually still in force. So things are just the way they used to be, Rama.
Indeed, we'll leave it there for the time being. Thank you for the update. That's Deji Badmus live in Lagos. For those of you who are Game of Thrones fans, you could perhaps refer to him as our watcher on the wall, waiting for news, of course, from the the meeting between the CBN and currency dealers. Now, let's move on to East Africa. If Kenya's latest budget is anything to go by, the country's finance minister reckons one of two things. Either Kenya needs a lot less banks, we've got about 42 right now, or the ones that are there need to hold a lot more capital, or perhaps both. The thing is, if Parliament does approve his proposals, commercial banks will now be obliged to have a minimum of at least $50 million in core capital by December 2018. The thing is, right now, the smallest of the top 6 banks in the country, where over half of the sector's assets are concentrated, has over $250 million in core capital already. And that then leads to the question, so what's the latest point of this directive? That's a question I put to a local financial commentator, Carol Musyoka.
You know, before we even look at 2009, let's look at what's happening in 2015. Okay, in 2009, quite a number of banks had to get to that level. But if you look at where we are today in 2015, you have 42 banks, of which 20 banks are way above, or slightly above, or way above the capital requirement that they've put in, which is 5 billion. You've got another 22 banks, of which 8 will just have to double their existing capital to get to the 5 billion, and 14 will have to multiply by about 4.52, about 5 times what the existing capital is. So the question I'd like to ask Ram, I always ask, is what is the mischief that the central bank is trying to cure, or that the Ministry of Finance is trying to cure? Because you have an overbanked industry. Many times you use the raising of capital to try and force a consolidation, but even if you were to try and do that, you've raised the capital, 50% of your existing industry is well capitalized, is well within, and another 8, so that take it to about 75% of your industry will be in that level by the time that you're looking to do. So for me, the million-dollar question is, why are they trying to do it, and why now? One way you can look at it is perhaps they're trying to deepen the level, the options that the government has for public-private partnerships or for borrowing. You have quite a number of, there's a high debt to GDP ratio today in Kenya, and perhaps the government wants to reduce its reliance on external funding and be able to pull on the local banks, and having far more well-capitalized banks will allow a deeper well for which they can dip into for their borrowing. That's one way to look at it. It's another way to say that there'll be other options for infrastructure development, because well-capitalized banks are able to do large ticket transactions and can also do a consortium. So you'll have a large number of banks that can come together in a consortium to do infrastructure projects, which the government would typically have funded by external borrowing.
Because they essentially have a limit to which they can borrow for any one client as a percentage of the capital.
Correct. Although that core capital argument, 25% of your core capital to one lender, doesn't apply when it's the government. However, if you're looking to do a PPP, a public-private partnership, then that would apply, and maybe that is what they're looking at doing. But as the current industry is currently structured, it's definitely not to provide a better offering for the masses. I don't think this is mass-driven, simply because if you look at the 20 banks that currently are at 5 billion and above, they actually market share in terms of deposit accounts, they have 95%.
Oh yeah.
Yeah,
because
of the deposit
and a
accounts.
huge chunk of that is just equity.
Yes, yeah. So it's, well, equity, CBA, right?
Oh, yeah, through
KCB,
Mshwari,
yeah,
yes.
through Mshwari. So if you look at the number of banks, you know, I did a quick back of the envelope calculation. You have using the Central Bank Supervision Report, December 2014, you have about 28 million bank accounts, deposit accounts in the country, of which 27 are within the 20 banks. So this aim of raising capital is not for Wanjiku. Yeah?
It's not for the ordinary.
It's not for the ordinary. It does not affect him at all, him or her at all.
Would it be fair to argue then that perhaps, in a sense, the finance minister lowballs things? Because, I mean, if he really wanted to force consolidation, 5 billion is drop in the ocean.
Yes, it is. Yes,
so essentially he lowballed it.
Completely. If you wanted to do it, he'd have done it at about 25 billion. Then you'd have really made it quite interesting. So one, the question is why, and they've not come out and told us why they're doing it. Yeah, we already have 42 banks who operate like a cartel. All right. The interest spreads tend to remain within a certain range. You'd expect that the top 5 banks, they have the power to bring those interest rates down, but they don't, because they enjoy, you know, an oligopoly. They can if they wanted to, but they don't. So what's the benefit if you're even reducing it from 42 to 20? You're not going to change the behavior that the current banking industry is doing with regards to pricing of loans, with regards to pricing of bank products. Bank products in this country, or banking in this country, is very expensive, and one of the reasons I posit for why it's so expensive is that we are allowing inefficiencies in the banking industry to be passed through to the customers.
Still in East Africa, India and Tanzania have signed trade agreements worth over $4 billion in a variety of sectors. That includes tourism and agriculture. The deals include a loan agreement between India's Exim Bank and the Tanzanian government on a line of credit worth over $268 million to fund the extension of a pipeline in Tanzania. The Indian Prime Minister Narendra Modi says Indian firms are ready to invest more in Tanzania. His Tanzanian counterpart, Jakaya Mrisho Kikwete, has pledged to create a conducive environment for doing business in the country. Over the last 5 years, poverty levels in South Africa have been gradually rising. Today, 2 out of every 10 South Africans have virtually no access to food or shelter. CEOs in the country took up their plight in a campaign that aims to raise money and awareness for the homeless. As Sumitra Naidu reports, they did so by sleeping in the streets.
The CEO Sleepout initiative started in Australia in 2006. South African CEOs agreed it was time to bring it to the streets of Johannesburg in the middle of winter. Over 200 CEOs traded their comfortable beds and warm homes for a cardboard box.
It's a wonderful experience to understand it and to empathize, but I think it just brings home a kind of what it means and the suffering, and we drive past it every day without really understanding it. I've been scared to do this.
We always identify with things that make a positive contribution to society or communities. We're in nutrition in the main, so we do a lot of that stuff, but this does something slightly different. It also helps humble you again and remind you of the gap between those who have and those who don't.
Each CEO donated $8,000 to the cause. Just over $2 million was raised for Boys and Girls Town, an organization dedicated to helping homeless children.
It's going to make a significant difference to the lives of vulnerable children. The money is going to be applied against basically 4 pillars: health, nutrition, education and shelter.
Well, I think it's a wonderful initiative. It's a way of getting corporate South Africa almost as one to stand up to the challenge. And then it's an unusual opportunity to, in fact, not just put the money on the table, but to actually pitch up and be counted too.
I think it's a great opportunity to mingle with like-minded people, talk about things that are important to us, talk about the future, things that need to change, and share in a wonderful experience.
Poverty and homelessness remains a major problem in South Africa. Every night, thousands of men, women and children have to sleep out on the streets. Many of them die as a result of being exposed to the cold during the winter months. 250 CEOs have come out here tonight in empathy of the poor people of this country and to encourage a culture of big business giving back to society.
Living in the streets is not an easy thing. It's not something you can figure out either. It's one of those things that you kind of survive when you're in it. Big business in South Africa is often criticized for not doing enough to change the plight of the poor.
We live in a world where there's a lot of inequality, and those of us who run corporations need to understand how the other side live.
It helps not only think about helping those that are destitute or those who are less fortunate, it also helps us think about what we can do to prevent people getting there in the first place.
I think that the social ills that affect a lot of our children are something that as parents and as CEOs and as leaders we should be concerned about.
I was shocked because I thought I was just going to have a piece of cardboard, and now I find that I've got this sort of house that I'm going to sleep in for this evening.
And I think each of us will ultimately be alone with the cold and the hard floor. Which I think is where the magic will really happen.
And as the cold set in, many tucked in for the night. Temperatures dropped to around 5 degrees, all for a good cause. Sumitra Naidu, CCTV, Johannesburg.
Now then, a quick run through the markets here for you. All the bourses we track here closing in the red, except of course the EGX 30, which wasn't trading today. Interesting news coming out of Afrin, of course, the proposed restructuring offer. It includes fairly well, controversial for some, debt for equity swap as part of the entire restructuring. The conversion of about $234 million of existing debt into shares of the company, but at the same time, they will be issuing a lot more shares as well. The details of that have just hit the wire, so you can check that out and see if there's any value for you as a shareholder. Fuel smuggling is strangling Benin and Togolese fuel stations. We'll tell you why. And we'll be back in Somalia. ISPs there simply can't keep up with demand for faster and faster speeds.
This is the first year that Africa will have more foreign direct investment than aid. And it's like the tipping point in terms of changing the way the continent is perceived. And I think this summit very much responds to that call. Now, whether it can materialize what is being announced is something that we'll have to check and see whether it happens.
Welcome back. Now, demand for contraband fuel, which is often refined in makeshift refineries from crude stolen in Nigeria, Africa's biggest crude oil producer, has created a huge illicit oil industry in the states around it. Now, the sector's become so big that even formally registered fuel retailers are now turning to contraband suppliers to keep their businesses running.
An estimated 17 million litres of fuel is smuggled from Nigeria to Benin every month, translating to an annual loss in excess of $300 million. Neighbouring Togo loses over $100 million every year to the same vice, hurting the country's regular fuel suppliers, who have to compete with the lower prices and more regular supplies offered by the smugglers. The result is that petrol stations in both countries often run dry.
It's a fuel station. I just came from there and they told me there isn't any. What am I to do?
Illicit fuel, which is mainly sourced from clandestine refineries for the more organised cartels and from accidental spills for the more opportunistic traders, reaches the consumers with a lot of impurities. Consumers, often desperate for cheaply priced fuel or forced to use illicit fuel due to shortages in the formal market, often suffer in the long run.
Tainted oil is not good because its flame is not the same as that from fuel stations, which can be caused by transferring from jerrycan to jerrycan or bottle to bottle, where sometimes rainwater can mix, leaving rubbish in the reservoirs.
Ridiculously, illegal traders often end up supplying the fuel stations during shortages.
Once there is an increase in prices in Nigeria where they get their supplies from, automatically a large number of those who purchased on the streets go to fuel stations that lack the capacity to provide for them, and this creates a lot of tension and thus shortage.
Till Benin's government is able to fully crack down on smuggling, the economy, the fuel stations and ultimately the regular consumer are all going to suffer. Andrew Thompson, CCTV.
Now, from dial-up to 3G and now onto fibre optic links, Somalia's internet penetration is growing pretty fast. It's a leapfrogging ahead in several respects. Now, each expansion of capacity and bandwidth has been driven by rising demand for more and more data. As Mohammed Hinmoge reports, even the current fibre optic link apparently is not enough to meet demand.
An ultra-fast 4G means generous data that allows customers to enjoy more of what they already have, faster than ever before. It's the fastest wireless internet for all smart devices and computers, and it's just 2 days from launching in Mogadishu.
We have bought the fast 4G LTE mobile internet service. This is a privilege because it's not a service that is enjoyed in East Africa. We will launch it by the 1st of June. We are now finishing the trials. This service will allow our customers to access the fastest internet service. It is the latest and it is very efficient.
This service will allow subscribers to browse with new peak data rates, different from the slow data transfer speeds that's now available. 4G services should make it quicker to browse the web on devices and computers and on unprecedented data speeds. But the big question is, for how long can this service be enjoyed? Would it be another short-lived service like the 3G? Promising as it was, the 3G mobile data service was available for only a few months. It was launched and immediately cut off. Al-Shabaab had banned it. 3G, the standard used for mobile telecommunication services and networks, had eased connectivity in Somalia, but had the shortest lifespan. Then there was an immediate reprieve. The fiber optic link came.
That was the biggest change in our internet connectivity. It is faster and convenient. We enjoy video calls, WhatsApp and Viber. It's also expanding very fast. Nearly all estates now have Wi-Fi connection. In fact, we can now download videos from YouTube conveniently.
Until now, access to the internet has been via dial-up or satellite links. Then fiber optic opened up internet penetration.
Somalia's internet has changed from 2014, that is since the arrival of the fiber optic. Internet penetration has significantly increased since. Its use has also doubled. Content upload has also gone up. Many other websites were created, all that courtesy of high-speed internet.
And with the expected 4G service later this week, Somalia's internet connection is set for new heights. The demand too is growing rapidly. Just like in the rest of Africa, youth hungry for content, connectivity and change are driving the demand. Mohamed Hirmoge, CCTV, Mogadishu.
Quick run through commodity prices here for you. Crude oil is still languishing essentially in the low 60s, but you ought to get an idea of just how brutally effective Saudi Arabia's flooding of the market and of course OPEC by extension has been. Look at Nigeria. NNPC's lowered the official selling price for its largest crude stream, the Akwa Ibom, to dated Brent plus 35 cents. That's the lowest differential since 2005. It's an absolute nightmare out there. We're back in East Africa next, looking at the rush to cash in on demand for set-top boxes in Uganda following the digital migration deadline.
Africa is not one country.
And Africa is not one story.
But as Africans, we do share one belief.
One more offensive in a
that whatever the challenge, we will overcome.
CCTV Africa brings you unrivaled coverage.
From the fight against Ebola to the fight for greater freedom.
From the figures seeking your vote to the figures shaping your economy.
This is Guy Henderson reporting from the jungles of East.
And all the reasons to celebrate the diversity of life on this great continent.
Welcome back. Digital signal distributors and pay TV providers in Uganda are cashing in on the rush to buy set-top boxes. Now, this comes after Uganda switched off analog broadcast transmissions in and around the capital, Kampala, leaving many in a blackout. Leon Sanyange has this report.
Queues and long waits. It's now a scramble to buy a set-top box in Uganda. Without one, an ordinary TV set cannot pick up a digital signal. The demand is high as the country migrates from analog to digital transmission. The switch has meant many are cut off from watching television.
They didn't believe they would do it, so they had postponed this thing over and over again. So this time it was more serious. So we couldn't do it before it finally reached.
Uganda switched to digital transmission after a June 17th international deadline. Now a set-top box costs about $50 each.
The government really, I guess, hasn't done enough. It would have basically given out these set-top boxes most free of charge, or at least 20,000 for everyone to really afford. But for example, this is like 550, so you find that very few people can get to buy it.
Uganda's Communications Commission, which regulates the transmission process, says the country is rolling out the new broadcasting platform in phases. But the migration process has been plagued by disputes between regulators and the leading broadcasters.
Of course, the issue that they have always wanted is extension, and that to us is not tenable. Because extend for what purpose? Who is not ready? Everybody is ready. All the major stakeholders are ready. They are also ready themselves. They have now been switched off from the analog platform, they're on the digital platform. What else do you want?
So far, a radius of 65 kilometers around the capital is covered by a digital signal. Those living farther away have yet to make the transition.
The other parts of the country are not being disturbed for the moment because they do not have digital signal completely. So it would be unfair for us to switch them off when there's no alternative platform. So as we roll out, more supplies of the set-top boxes would be coming in.
Among the 5 East African states, only Tanzania and Rwanda have successfully switched over to the digital platform. It is still not yet clear how many viewers have migrated to the digital platform. The government says it plans to lay down digital signal infrastructure across the country and achieve full conversion by the end of the year. Leon Sanyange, CCTV, Kampala.
And finally, nearly 14 years after the 9/11 attacks, a transportation hub at the World Trade Center site is now finally close to completion. Once fully operational, the PATH train, 11 subway lines and a number of retail shops will now be available to the public. The new World Trade Center transportation hub has far exceeded its estimated costs, however. It's now projected to cost a total of $4 billion. Half of that is coming from the federal government. The remainder has come from Port Authority bonds and insurance payouts. And the budget overruns have been blamed on various factors, including infighting between politicians and government agencies that have controlled the trade center site in the years since the design was chosen in 2004. Right, then a quick run through currencies here for you. Volatility really is the watchword in East Africa. The Kenyan shilling heading south once again, 98.50 the operational number we're looking at today. Quite a bit of demand coming through from energy and telecommunications companies. We'll see how, of course, the local unit behaves against the American dollar later on next week on Monday. In contrast, of course, to South Africa's rand, which strengthened after the Fed meeting earlier in the week. That's it for this edition of the program. As always, we value your ideas and your feedback. Send it all to Global Business Africa at cctv.com. As usual, the news continues 24/7 on Facebook and on Twitter. We'll see you over there and on Monday. Thank you for watching.